Hello, my name is Trevor Watson, and I'm the VP of Business Development for LHPH Capital. We are a specialty finance company providing lines of credit to Lease Here Pay Here dealers across the nation. I'd like to thank you for taking a few minutes out of your day to learn a little bit about LHPH and why it's well positioned to help dealers navigate the challenges of this COVID-19 pandemic. LHPH has been around for a number of years, however, it's still not as well understood as the more traditional model of Buy Here Pay Here. LHPH at its most simplest is BHPH, just using a lease contract instead of the retail installment sales contract. However, by introducing the lease into the equation, dealers access a number of benefits and advantages that the retail installment sales contract simply can't provide. Whether that's the structure of the lease itself, the more friendly nature of the state and federal laws when it comes to taxes, to bankruptcies, and to regulatory compliance in general, it allows the dealers a range of new opportunities that they simply cannot get with the retail installment sales contract. So to start off, I'm going to briefly touch on the top 10 benefits of LHPH just to give an overview to everyone. And then I'm going to dive into the 5 benefits that are the most applicable in today's environment. Here are the top 10 benefits of LHPH. First, affordability. Thanks to the residual, a lease offers smaller payments for the consumer on a vehicle than a retail installment sales contract. A critical issue right now as used car prices continue to hit new heights due to reduced supply. Second, competitive advantage. An LHPH dealer can offer a lower monthly payment on a newer vehicle with lower miles than a Buy Here Pay Here dealer can offer on an older vehicle and higher miles. Those newer vehicles require less maintenance and break down less often, improving overall portfolio performance. Bankruptcy Remote. You may not realize this, but unlike retail installment sales contracts, leases cannot be included in a bankruptcy. Sales tax advantage, or the Cashflow advantage. In 31 states, leasing offers pay-as-you-go sales tax. It allows you to be cash positive at the inception of a deal. No more using the customer's down payment to cover some or all of the sales tax at delivery. Profitability. Leases allow the dealer to incorporate a range of new fee opportunities that are not available in traditional retail installment sales contracts. In addition, as your lease portfolio matures, you begin to receive a stream of vehicles coming off lease that can be recycled or released with no debt and pure profit to the dealership. The federal income tax deferral. With leasing, you are able to claim the depreciation from the vehicles in your portfolio on your taxes. This results in an incredible opportunity to defer federal income tax for years to come, thanks to your LHPH portfolio. Collateral control. With the increased focus by regulators on repossessions during this time, being the owner on the title of the vehicle instead of just the lien holder adds additional protections and rights to the dealer that they do not have with an installment loan. Customer retention. As opposed to Buy Here Pay Here, where your customers can trade out of their car at any dealership, with LHPH, every one of your customers will be coming back to your store when their lease matures to return the vehicle. You have the first opportunity to recapture their business on their next vehicle. Residual cash flow. As the leases in your portfolio mature, you will experience a strong influx of cash flow from the residuals on each unit. And finally, flexibility. A lease, by its nature, is a flexible financial instrument. You can create opportunities and adapt to changing market conditions by using this flexibility. Residuals can be matched to market. You may choose to roll in maintenance and insurance coverage to develop your own subscription program, or adjust your fee structure to match the local economic situation, all thanks to the flexibility of the lease. So that's a fairly extensive list of the advantages for LHPH, and it would take longer than I have available today to go through each one of them in detail. However, there are 5 primary benefits for today's environment in the COVID-19 recessionary environment that are of the most important. Those are going to be affordability, competitive advantage, the bankruptcy remote nature of the lease, the sales tax and cash flow advantage, and profitability. The first benefit of LHPH that I wanted to go through is affordability. Affordability is a key component of both Buy Here, Pay Here, and Lease Here, Pay Here. You obviously can't put a deep subprime consumer into a $1,000 a month payment and expect them to be able to pay through the entire loan or lease. The challenge becomes, and it's been this way for a number of years, that used car prices have continued to increase, making that more and more difficult to find that sweet spot to keep that payment affordable. And then, of course, bring on the COVID-19 pandemic, and we now have used car prices that have gone to historic heights. We don't know exactly when those will come back down. And even if they do come back down, will they go lower than they were prior to the pandemic? It's highly unlikely, at least for the foreseeable future. Now, the challenge, obviously, as used car prices continue to increase, is that the monthly payments continue to go up at the same time. And there's not a whole lot of levers that we have to be able to make any impact on that with a retail installment sales contract. You have your amount financed, you have your interest rate, and you have your term. Obviously, you're probably not going to cut the amount financed. You're not going to sell the car for dramatically less. You're not going to reduce the interest rate because there is a certain amount of risk involved in this and certain losses, and you need an interest rate to cover those. So the last lever that you have available is your term. That's the reason why we saw terms stretching and extending over the past number of years in the buy here, pay here space, and likely to see more of that now that used car prices have gone even higher. Of course, the challenge that we all know is that if you stretch your term, you inject risk into your portfolio, and the inevitable result is higher charge-offs. With a lease, you get something a little different. With a lease, you now incorporate the residual into the equation. And this is a real game changer. With this example that you're looking at here, on the left-hand side, we have a lease, and on the right-hand side, we have a buy here, pay here loan. Both of them are going to be a $12,000 cap cost on the lease or an amount financed on the loan. Both of them are over the course of a 36-month term at a 24% interest rate. You'll see the 24% IRIL, which is the interest rate implicit in the lease on the lease side, and that is the APR equivalent. So for the buy here, pay here loan on this particular car at $12,000, we're going to have a $471 per month payment to the consumer. With the lease, using a 20% residual of the sales price, so you'll see that $2,400 residual there, the payment to the consumer is going to be $377 per month, nearly $100 less per month than the loan on the same car. Now, one of the key pieces about the lease as well is that the residual can be adjusted when it makes sense. So if you have a vehicle that you believe is going to be particularly strong, or one that is known for having a very strong residual, and depending on what the ACV of that vehicle is, it's highly likely that you could be at a 25, 30%, and on some vehicles, potentially even a 35% residual. That means that obviously that payment would be even less to the consumer. So you can see here what the impact of the lease is and how it actually makes these vehicles more affordable for that consumer and allows them to actually have a chance in making the payments to you over the course of the entire term. The affordability advantage of LHPH actually leads directly into our next benefit of LHPH, particularly in the COVID-19 era, and that is the competitive advantage. The competitive advantage benefit of LHPH that is provided by that affordability piece and the residual in the lease is of particular importance in today's environment. As those used car prices continue to grow, and even if they stabilize, we're in a whole new market for used car prices. What the lease allows LHPH dealers to do is to offer a newer vehicle, a more expensive vehicle, for the same or lower price than the buy here, pay here dealer down the street, who might be selling an older vehicle with higher miles. So as an example here, I found a couple of vehicles on Car Gurus, and you can see we've got the 2010 Toyota. They're offering at $12,000. It's got 116,000 miles on it. On a retail installment sales contract, your deal is going to be $12,000 amount financed, 36 months, the 24% interest rate, and that $471 per month payment to the consumer. On the right-hand side, we have a used 2020 Kia Soul. So it's 10 years newer. It's got 100,000 miles less. They're offering it up at $14,500. So we've got our cap cost of $14,500, 36 months, 24% interest rate, and that one happens to come out to a $471 per month payment as well. This one I have the residual set at 35%, which would be about right for a vehicle that's this new with that low of miles. So if you are the LHPH dealer and you are advertising this 2020 Kia Soul at $471 per month as the payment, and your next door neighbor who happens to be a buy here, pay here dealer has their 2010 that they're offering a $471 per month payment, which one do you think your consumer is going to go? Now let's take the competitive advantage to the next step, portfolio performance. We all know that when vehicles break down, our customers tend not to make their payments. So which vehicle do we believe is going to go for a longer period of time with minimal maintenance issues? And I think we all can safely assume that the 2020 on average is going to have a much better performance than the 2010 with 120,000 miles on it. That's the next piece of the competitive advantage for leasing. You have a vehicle that is newer, has lower miles, is likely to have far fewer issues, and that customer is not only has a smaller payment to make each month to you, but is likely to experience far fewer mechanical issues and continue to make their payments on time. So you can see how the affordability benefit of LHPH creates this competitive advantage for LHPH dealers over the traditional model for both increasing sales and increasing performance of their portfolios. The next advantage of LHPH is something that many people are not aware of. Leases are considered to be bankruptcy remote. There's an expectation in the market that a wave of consumer bankruptcy filings is waiting in the wings. The stimulus money and additional unemployment benefits may have staved off this wave for the moment, but even with the stimulus, 1/3 of monthly housing payments have been delinquent recently. As the stimulus monies fade, consumer BKs will rise. It is quite likely that you will experience a significant increase in BKs in your portfolio over the next few years. Here's a number of quotes that I was able to find from all kinds of different articles just doing a quick Google search on consumer bankruptcies. But unlike the retail installment sales contract, a lease cannot be included in a bankruptcy. A lessee can only choose to do one of two things, which is either accept or reject the lease. If they choose to accept the lease, they must continue making the original payment agreed to in the lease contract. There are no cram downs on a lease. If the lessee chooses to reject the lease, they must simply return the vehicle to the lessor, in this case the dealer. That makes leasing a prudent option at this time to minimize the impact and protect your portfolio from this upcoming wave of consumer bankruptcy filings. The next advantage of LHPH in today's environment is something that you may have heard a little bit about before, but may not entirely understand, and that is the sales tax advantage, or as I like to refer to it, the cash flow advantage. For LHPH dealers in one of 31 pay-as-you-go states across the nation, the sales tax is calculated only on the actual monies collected by the dealer, for example, the down payment and the first payment. Sales tax is then remitted to the state on each lessee payment received for the remainder of the lease. With this structure, the dealer can pay sales tax over time and with the money paid by the lessee, rather than all up front. This helps dealers start leases on a cash-positive basis, requiring less capital to grow the business, as well as better unit economics throughout the life of the lease. Here's a simple example. Let's imagine that you have a car that you're going to sell for $12,000, and you get a $500 down payment from the customer. With a Buy Here Pay Here deal in a state with a 7% sales tax, you will owe the state $840 in sales tax when you roll that car. The entire $500 of the customer's down payment plus $340 of your own money just went out for tax, and it will take months of successful customer payments before your cash flow recuperates. Now, if you had leased this vehicle in the same state with pay-as-you-go sales tax, you would have paid 7% of the customer's down payment, or $35, $500 times the 7%, in sales tax to the state when you put the vehicle over the curb. The other $465 of that down payment is yours. You are already in a positive cash flow position from the outset. Now the customer will make their $377 per month payment to you, of which you will remit $26.39 to the state in sales tax each month. Now multiply this impact over the 10, 20, 50 deals you sell or lease per month, and you can imagine what kind of impact that's going to have on your cash flow. Cash flow is king in this business for both Buy Here, Pay Here and Lease Here, Pay Here dealers, and it's particularly important in today's environment. The sales tax advantage of leasing can be the solution to this challenge. The last benefit of LHPH that I'm going to talk about today is something that's near and dear to all of our hearts, which is profitability. Thanks to the structure of a lease, you gain access to new fee opportunities that you simply don't have with a retail installment sales contract. There are 6 common fees that are incorporated into most leases that you could use in your own lease contract. Those are the acquisition fee, the purchase option fee, the disposition fee, the security deposit, excess mileage, and excess wear and tear. I've listed out the standard range for those particular fees that most of our dealers use. You can see the AC fee here at $495 to $895, the purchase option fee between $350 to $450, the disposition fee of $350 to $450 as well, the security deposit, which you need to pay a little attention to. Most of our dealers have them around $500. Some have them greater, but the key here is that it needs to be consistent. Security deposit cannot change from one customer to the other customer unless it's associated with something that is not credit related, such as the ACV of the vehicle. If a lower ACV car has a $250 security deposit and a higher ACV car has a $500 security deposit, that would be fine. You just need to ensure that it's written down in your policies and procedures. And then the standard range for mileage fees of 10 cents to 15 cents, and of course wear and tear determined by the condition at the return of the vehicle. These fees, when taken in their entirety over the course of your entire portfolio and consistent over month, can have an incredible impact to the profitability of your program as a whole, and something that's not available with a traditional retail installment sales contract. The second piece to the profitability advantage for LHPH is that recycling of inventory or releasing of inventory when your leases mature. Unlike a buy here, pay here loan where the customer owns their vehicle when it is paid off, once your lease portfolio matures and you begin receiving lease returns back, you now have a steady stream of inventory coming back to you with no debt against them. These vehicles can be reconditioned and returned to your fleet, creating a debt-free stream of payments that will take the profitability of your LHPH program to new heights. What also makes this available is the fact that you can lease out the newer vehicle with lower miles. If you take that 2020 Kia that we used the example of earlier, and you put it out on a 3-year lease, and you bring it back 3 years from now, it may have 60,000 more miles on it, but it is likely to still be available to lease out a second and potentially even a third time on a full-term lease. That has huge implications for the profitability of your business. Here's an example of the gross profit on a portfolio that originated its first lease 5 years ago in month 0 and has been originating 30 leases per month with an average ACV of $9,000 per car with an average of a 36-month term. Notice the inflection point at month 37 as their vehicles begin to come off lease and are recycled back into their fleet with an average of $1,500 of recon at that point in time. Not only does releasing benefit profitability from the new leases, an additional advantage for LHPH dealers that they're just coming to realize right now from the lease returns is it dampens that anxiety of where used car prices will be in 2 or 3 years from now. You're basically guaranteed inventory returning to you month over month that you don't have to go out and source from an auction or bid against your competitors. This particular dealer has 20 to 30 leases coming back each month, ready to be reconned and returned to the line, and not having to go out and find all those vehicles at auction during this particularly unique time. The profitability advantage of LHPH is enormous, particularly as your portfolio matures, and you can see this example right here. So as you can see, these 5 advantages, the affordability piece for your consumer, the competitive advantage of offering newer vehicles with lower miles for the same or lower payment than your buy here, pay here competitor down the road, the bankruptcy remote nature of the lease, the sales tax advantage and cash flow advantage of pay-as-you-go sales tax, along with the impact on profitability from the new fee income as well as the opportunity to release your inventory, create a very strong model for dealers to navigate the challenges for the COVID-19 pandemic. Thank you very much for your time today. We appreciate you watching our video. And if you'd like to learn more about LHPH Capital and our funding program for LHPH dealers, please look us up at lhph.com or give us a call at 619-222-9999.